Okay, welcome to Investing with the Stockscores approach. I'm Tyler Ballhorn from Stockscores.com. Tonight's presentation will last about an hour. I'm going to go through the investing approach that we use with the Stockscores indicators and the Stockscores tools, as well as the education on how to execute the Stockscores investment approach. Introduction will begin, and then I'll talk about the Stockscores investing concept, why what I do works, how it works, talk about how we measure performance, then the economics of trading. I'll show you the process for finding trades. We'll talk about the components of the Stockscores approach to investing and sort of a differentiation from active trading, which will be tomorrow's webinar. And I'll talk about how you can become a Stockscores investor. And then the final thing we'll do is assess the stocks that you have an interest in. So if you want me to analyze a stock for you, you'll be able to submit the symbol and I will look it up for you. We've got Daniel on from Desjardins. He's going to come on for 2 or 3 minutes just to explain what Desjardins offers. They're our sponsor for these events and also my broker. All right, so I've been trading for 25 years. I started with $3,000 in capital when I was 19 years old. I developed some tools for trading because when I started trading, the tools that I needed just weren't out there. And so I created my own. And I did that in 2000, 1999, 2000. And so that's been a steady progression of evolution, I guess, which is what the Stockscores.com website is all about. My approach is, I would say, unique. You know, when I speak to investors who've never heard me speak before, a lot of them have never heard of my approach or understand it, but I think most people, once they get through the concept, they can appreciate why it would make a lot of sense. And hopefully tonight, for those of you that are new to Stockscores, you'll get that sense as well. I've also developed education for others. I started teaching people how to invest in the stock market in 2001. And well, at least formally on my website. I've actually been teaching people even longer. I used to run some investment clubs at the University of Calgary and in the city of Calgary where I grew up. And then that evolved into the Stockscores website. So that's a little bit of my background. I do have a degree in business and finance, although I can't say that I learned a lot in school on how to trade the stock market. That's mostly self-taught, and we'll get into a little bit of how I did that. All right, so what is the Stockscores investing concept? Well, very simply, one of the things that I've learned is that most stocks, most of the time, are not worth trading because most stocks, most of the time, trade relatively normal with their correlation to the market. So today the market opened down. The Dow was down as much as 180 points in the morning, but it came back to close close to flat or even. And most stocks kind of followed that. If you go look at the charts of individual stocks, 90% of them will have moved very similar to what the overall market did today. There were, however, some stocks which traded very differently than the overall market. And these are what I would term the market beating stocks. So for example, AOL was bought by Verizon, so it traded up really big. Ocean Rig, ORIG, traded up strong and rallied into the close. Fibria Cellulose is a stock that I picked up on this morning that outperformed the market today. So those are market beating stocks. And the reason or the way that we find them, the key to finding these market beating stocks is to focus on abnormal activity. So whether you want to hold a stock for the next 2 years or hold a stock for the next 2 hours, my approach to the market always revolves around abnormal activity. I look for stocks trading with abnormal volume and abnormal price movement because those things tell us that there is something going on fundamentally at the company. Now, for example, America Online, AOL, today was up 18% or 20% because Verizon decided that they were going to buy the company for $5 billion, $50 a share. What's very interesting though is 2 days ago, I was day trading AOL because it was trading very abnormally. A stock that nobody really cared about, had been kind of going down for a little while, all of a sudden came to life 2 days ago, traded way more volume than normal, and made a price gain that was much greater than normal. Now, I don't know anything about AOL. I know they're in the internet business. That's all I know. But the market activity told me something was going on. So I bought it. What's interesting is today the news comes out to say, hey, Verizon is going to buy AOL for $50 a share, which was a 17 or 18% premium over yesterday's close. It's no accident that AOL was trading abnormally 2 days ago. The reality is some people had better information than others about AOL. They knew that something was going on. They knew that maybe there was going to be a deal announced, and the market started to speculate on that deal a few days ago. And the news came out today. So that's how I trade. I don't wait to get information. I follow the people that have the information first. And when they start to trade a stock because they have some significant new information, I pick up on that. And I can do that as a day trader or as a long-term trader. If you learn to look for abnormal activity, you can find these stocks that are trading on better fundamentals than before. But there's more to trading than buying the right stock. You must also manage risk effectively. You must preserve your capital. You must exit at the right time. And finally, you must overcome your emotions. Risk management is the #1 criteria for being a successful investor. If you lose all your money because you don't manage risk very well, you're out of the business. Whether you're trying to manage your retirement savings or trying to make a living trading the stock market, your #1 goal must always be preservation of capital and managing risk. We also are not going to be right all the time, and so when we are right, we have to let our profits run. We have to let those stocks do their thing so that we can get a good profit, which will pay for the inevitable losers that we encounter. So exiting at the right time is important. And finally, if you are a normal human being, you are predisposed to fail in the stock market because normal human beings have an emotional attachment to money. And so one of the things that you really have to learn to do is overcome your emotions. So here's something very important to the Stockscores investing concept. Most market-beating stocks start their trends, and by trend I mean a consistent period of rising prices. Most market-beating stocks start their trends with abnormal activity. Okay, so market-beating stocks start their trends with abnormal activity. However, not all abnormal activity leads to big price moves. So in other words, a stock that went up 10% today, that might be an abnormal price move, most likely is. And if it traded 3 times its normal volume, that might be an abnormal volume day. But just by doing that doesn't guarantee that those stocks are going to outperform the market. Now, most stocks that outperform the market will do that. AOL has been an outperformer this week, and it started behaving abnormally just a couple of days ago. Maybe I'll show you this chart here just so you can see it. Here's the chart of AOL. Okay, so there's the day that I started trading it. I don't know anything about AOL, but I could see that the price action was abnormal. And the volume on that day, although it doesn't show it so much today because it was so big today, that day 2 days ago was the highest volume it had traded in 3 or 4 months. All right, so that's what I pick up on. And then when the news comes out, you get to enjoy that. So we must combine this concept of abnormal activity with other analytical methods to trade the stocks with the best potential. So most stocks will start their market-beating trends with abnormal activity, but we have to qualify what abnormal activity really matters by looking at the charts. So here's a few examples. Here's a stock, Gordman Stores, and it started to behave abnormally early, and it went into a market-beating trend. Here's Patient Home Monitoring, one of the top-performing stocks on the TSX Venture this year. It started to behave abnormally right here, and it went into a market-beating trend. Now, before we get into some of the analysis of stocks, we need to understand how we measure performance with my method. I don't ever say, oh, I made $1,000 on a stock, or I don't ever say I made 17% on a stock. I measure performance in consideration of the risk that I had to take in order to earn the reward. You know, making $1,000 if your potential loss was $2,000 is really not a great trade. We want to judge our performance using reward for risk. So risk $1 to make $2, that's a reward for risk of 2. Risk $1,000 to make $2,000, that's a reward for risk of 2. However, risking $2,000 to make $1,000 is a reward for risk of a half, 0.5. So the reason that's important, because I am a strategy trader. I need to understand my average reward for risk on my winners compared to the average reward for risk on my losers. And this comes down to the economics of investing. No investor, not the greatest investors in the world, not someone who gets lucky, no investor is right 100% of the time. So we have to accept that. We're going to be wrong some of the time. And so what's important is that our winners pay for our losers. And in order to make money consistently in the market, it's not so much about being wrong more than we are right, but having winners that pay for the losers. So let's go through an example of how the economics of investing work. Suppose you have a strategy. Your strategy might be buy a stock every Tuesday morning if it's up 5% or more. I mean, that's a silly strategy, but let's just put a silly strategy into the example. So let's say you test that strategy and you find that 60% of the time you lose money and 40% of the time you make money. Your average loss is $500 and your average profit is $1,500. How much do you make or lose after 10 trades? I'll let you look at that for a second and ponder it, and then we'll go to the next slide where I explain it. All right, so here's the economics. 6 times out of 100, 60% of the time, 6 times out of 10, sorry, you make $500. That's a total profit of $3,000. 4 times out of 10, you make $1,500. So, sorry, that's $3,000 in losses. So 4 times out of 10, you make $1,500. That's $6,000 in profit. So after 10 trades, you make $3,000. Even though you are wrong more than you are right, you are actually making a profit. So that's something very important to understand. To be a good trader doesn't mean that you have to be right all the time. In fact, you can be wrong more than you are right and still do well if you take small losses and have bigger gains. So that's why this concept of expected value of a strategy is so important. If out of 10 trades, or in my typical strategy, if I do 10 trades, I find that I have 2 bigger winners where the reward for risk is greater than 5. I have 4 to 5 relatively small losers and 3 to 4 smaller winners. The small winners and the small losers tend to balance each other out, and I make most of my overall profit from those big winners that come along. Rarely, only 2 times out of 10, but they still come along. And the key to being successful with that approach is to have the patience to ride the big winners, because that's where most of your profit comes from. Now, I've been doing a test over the last 2.5 months of one of my strategies, just trading it each day with the rules that I've written in my books and on my website. And I've just been testing it through the spring here. And I found that about 65% of the time it's been profitable. Means 35% of the time it's been a loser, but the profits have been bigger than the losses, and therefore the overall profitability is very good. And that really is what I talk about when I'm talking about the economics of investing. All right, so what are we going to look for when we start looking for stocks to buy? There's a few things. We want stocks showing signs of investor excitement, and we want that to happen from predictive chart patterns. We want stocks that break out through resistance, from low price volatility, from optimism, and we use our Stockscores indicators to help us see those things. So our Stockscores indicators for investing are used as follows. We want a sentiment stock score greater than 60, a signal stock score greater than 80, and a predictive chart pattern. And when we look at some charts, you'll see this in a moment. So if you go to the Stockscores website, you can pull up any stock and you can see the stock scores for that stock. And they change throughout the day. They won't change a lot during the day, but day by day they change. And there's 2 indicators on there. One's the sentiment stock score. We want that number to be above 60. and signal stock score to be above 80. And if those two things are good, then we take a look at the chart pattern to see if it has a predictive chart pattern. Now I want to stress, these three rules here are only for investing. We don't use them for day trading or for swing trading because they're too slow. So let's go back to our three examples. Number one, we've got a sentiment stock score, which is the green line, greater than 60. There's 50 right there. The blue line is the signal stock score. It's greater than 80. So we got 1, 2, and then finally 3, a predictive chart pattern break. There's a break through resistance from optimism, from low price volatility with abnormal activity, and that stock goes into a market beating trend. Now you may not understand all of these things yet. A lot of these concepts and patterns and things like that are taught in our Stockscores Education Center, which I'll show you in a minute. But that's the basic rules for that stock. Let's take a look at the next one. All right, so sentiment line above 60. Well, there's 60 right there. And we can see the green line is above 60. The blue line jumps up above 80. And we have a break from a predictive chart pattern. I can draw a line across these tops. I can draw a line across the bottoms. The fact that those bottoms are rising is optimism. This is a line of resistance. The fact that these two lines are compressing or moving toward one another imply that volatility is diminishing. That's one of our criteria for a predictive chart pattern. And there we get a breakout through resistance from optimism with the good stock scores, and that stock goes into a market beating trend. Now, how do you find these in time? I mean, it's all well and good to say, oh, look, it worked back here, but unless you see them on that day, it's kind of useless, right? So we need a tool and we need some knowledge to find these things. So let's start with a tool. On Stockscores.com, we have a tool called the Market Scan, and combine that with my Stockscores strategies, which are settings for the Market Scan tool, we can go looking for investments. If we want stocks that have yield, we can add that in. If we're more interested in stocks that are going to move up and give us capital gains, we can add that in as well. So moving into the Stockscores website, let's go to the Market Scan tool. And let's select a position trading scan, which is what we would do for investing. We're going to use the Stockscores Simple Canada strategy. So I'm going to select that one. I'm going to run the report. And it instantly found for me 15 stocks that meet the basic criteria of that strategy. Next, I'm going to visually inspect these charts, looking for good chart patterns. So having done this for a while, I can look at a chart and in 2 seconds know whether it is worth considering or not. It takes some practice, but once you've practiced for maybe a month or so, you can get to the point where you can see the patterns in these charts. Now I'm going to cycle through these. I'm actually going to pause on this one because this one gave a good pattern break right back here. You can see we had above 60, above 80, abnormal volume, abnormal price action, breaking through resistance. This pattern is called a rectangle consolidation. And that was at 67, 68 cents. Now the stock's at 95 cents. So it's made 25 to 30% gain in less than 2 weeks. And it all started with abnormal price movement from a predictive pattern where the stock scores indicators were in the right place. I'm going to go through these fairly quickly, see if I can find something for you. And so far I don't see anything that I would buy tomorrow, but I will stop on one if I do. And we're going to come back and do this a little more at the end of the presentation as well. So I just went through all the stocks that were found with that Canadian market scan. Didn't find anything that I like today. No problem. We do it tomorrow. And we can do it on the US market. And we can do it on stocks between $5 and $20 if we want. We can do it on stocks that pay a yield if we want. You know, if we pull up the Stockscores Simple Market Scan, Canada, I can add in a filter that says, show me only the stocks that pay a dividend of at least 2% per year and run the scan. We're going to get fewer results this time. Now we only have 5 stocks that meet the criteria where before we had 15. So that's how the market scan works. It's a great tool. It will allow you to go through 15,000 stocks in mere minutes instead of hours or days because the tool does most of the work. All we have to do is inspect a few charts for the right chart pattern. There's more, however, to the tool. I mean, I could hand a wrench to someone who doesn't know anything about a car. Doesn't mean that they're going to be able to take that wrench and change the alternator. In addition to having good tools, you also need to have knowledge. And so the components of a trading approach have a number of things. We need a strategy, which is a set of rules for when to buy and sell. We need some skill in reading charts. Okay, remember I said you can look at any chart and in 5 seconds, 1 second, know if it's good or bad. Now, that one's okay, but not great. I would pass on it as a trade. I knew that as soon as I looked at the chart because I've had practice reading charts. You need a process. So what I just showed you was the process that I use each day to find investing type stocks that would be longer term trades. You need tools. We showed you the market scan tool. As a trader or as an investor, you must have emotional control and discipline, and there's ways to get that. There's some things that I teach people on how to desensitize yourself to risk, how to make the right decision, not the emotional decision. And then finally, you need capital. I mean, all of this stuff is well and good theoretically, but unless you're going to put money to work, it's kind of a waste of time. I mean, maybe it's fun. Some people play games with trading, and I recommend everyone that's initially starting trading do it on paper first until you build some experience, but ultimately you need all of these things to be successful in the market. So how can you learn the knowledge component, the processes? How can you learn how to use the tools? Well, what I did was the hard way. I developed and tested my own strategies. For 8 years, from the time I was 19 till 27, I spent every waking moment analyzing the stock market. I was a student at the University of Calgary in the business program, and my hobby was the stock market. I just wanted to know everything about it. And I taught myself everything because back then there wasn't a lot of books about the stock market. There was a few about trading commodities. There wasn't a lot of, there wasn't anyone teaching people how to trade the stock market, so I had to teach it myself. And it took me 8 years to kind of get good at it. And I paid a lot of expensive lessons before I was successful. So that's one way to do it. Maybe it won't take you 8 years with all the technology available out there. You can probably do it quicker than what I did, but still it's the long road. Another alternative is to have someone teach you how to do it, and that's something that I do. You can learn my strategies from me and basically benefit from my 25 years of experience. Now here's how it works. The Stockscores Trader Training has a series of steps. Step 1, you read my book, The Mindless Investor. This is a basic overview of the market, gives you a theoretical overview to my approach. Then you learn the foundation skills, which are the core skills for applying my strategies. I'll show you these things in a minute. And then you start to learn my strategies. We have the investor strategies, which is what we're focusing on tonight. And then you have the active trader strategies, which is what we are going to focus on tomorrow. So let's jump into the Stockscores Education Center. I'm going to show you these things right now. So I go to the Stockscores website, go to Education, and I'm going to just go down here to the different functional areas of the Education Center. So I've blown that up now. All right, so getting started. These are free videos that you can watch tonight on the basics of using our website, stockscores.com, the basics of trading in general, and just some things to get you started if you really don't have a lot of experience or knowledge with the stock market. So if you wanted to learn about the Stockscores indicators, which we talked about tonight, there's a video there that explains what they're based on, how they're derived, how you use them. Quick little video to get a handle on that. If you want to learn about the basics of reading charts or how to use the Stockscores charts or how to use the Stockscores market scan, that's all in the getting started area. Then we go to the foundation. The foundation, as I said, are the core skills that you need to be able to apply my strategies. So one of the things you need to be able to do to apply my Stockscores simple position trading strategy is to read charts. So step 1, you got 2 videos to look at. The 6 elements of chart patterns, there's a written lesson that explains what they are and how they work. Take you, 15 minutes to read that. Then you've got a video called the 6 elements of chart patterns. That video is, I think, 30 minutes long. Yeah, 30 minutes and 31 seconds long. I can blow it up full screen, watch it from your own home. Once you have access to this material, you can watch this video over and over again. It's just like tonight's presentation where I am explaining it to you through the internet. All right, I'm going to stop that. You can probably hear my voice in the background. We'll just shut that down. Once you've read the lesson and watched the video, you're ready to do the assignment, a series of questions to make sure you understand the concepts. And then at the bottom of those questions, there is a video explaining the answer to the assignment. And then finally, you're going to take yourself a little multiple choice test where you're going to answer a series of multiple choice questions to make sure you understand those concepts. Okay, so that's how the foundation area of the website works. And you can see that there's a whole number of different modules here. The biggest ones are the first two, or these two right here. The rest of them are shorter. And you can count on spending, depending on your level of experience, 4 to 8 hours to get through this stuff. So it shouldn't take a ton of time. I can teach everything in here in about 3 hours when I do a foundation review class. But if you've never studied the market a lot, give yourself more time because you're going to pause and go back and look over things. If you're pretty experienced with trading, you can probably get through some of this very quickly. But even if you are experienced with trading, I don't do things the way most people do in my approach to the market. My methods are not 100% different than everyone's, but there's certainly some things that are different. And so even if you consider yourself an experienced trader, I really recommend that before you start reviewing my strategies, you at least go through the first half a dozen of these videos here because they will give you a good basis for learning my strategies. Then we get into the strategies. With the strategies, there's a written lesson and a video. So if you wanted to learn the Stockscores simple strategy, which is the one that I did tonight, well, there's a written lesson, and then there is a video that explains it as well. So the video for this strategy is 10 minutes long, 11 minutes long. Anyone's can find 11 minutes. You can watch these on your iPad, on your phone, on your computer. As long as you have an internet connection, you can watch those videos. And as I said, once you've purchased access to this stuff, you can do it as many times as you want. You can review those things as many times as you want. So the foundations, each lesson has a written component, a video, an assignment, and a test. And for the trading strategies, we have a written lesson and a video. The foundation course, again, is access to the foundation lessons on the Stockscores Education Center. These are the core skills that prepare you for the implementation of any of my strategies. So it's your basis of knowledge before you start learning my strategies. Once you've done that, you can start to learn the strategies. If you do the investor course material, you're going to get access to my investor strategies, which are my presets. When you go into the Stockscores market scan, go to the market scan here, there's these presets. These ones right here are my investor strategies. So I've got a strategy here for people that only want to look at the market on the weekends. You don't want to spend a whole lot of time on the market, run the Stockscores Simple Weekly. If you want to look at the market early in the morning, or not early in the morning, but in the first hour of trading, look at the morning movers market or scan. That's what those are for. So these are all included if you take the investor course. As my student, you get email support from me. So if you're learning the material, you have questions, you just fire me an email. I probably answer 50 to 80 emails a day from my students, and I'm pretty prompt at getting those turned around. And then you also get, with this course material, 6 months access to our tools, which you can then renew at $300 a year. Active Trader course, you get the foundation course, you get the investor course, but you also get access to the Active Trader strategies, the Active Trader market scans, email support from me, 6 months access to our tools. But one other thing is you get proprietary real-time indicators for TradeStation. Now I'm going to be showing that tool tomorrow. For someone that wants to become a professional trader, make a living trading the market, it's a very powerful piece of software that I use. I've used it for, it seems like forever, probably close to 10 years now. And I've written special indicators for that platform to execute my day trading strategies. I'm not going to show you that stuff tonight. That is something we will do in tomorrow night's webinar. There's also a mentorship option. If you want to take any of those courses, but you want me to coach you through it one-on-one for 6 months, you can do the mentorship. Let's talk about cost. Foundation, $995. Take the investor course, it's $24.95. That includes the foundation course. Active Trader, $34.95. It includes the investor and it includes the foundation. Mentorship, $74.95, which includes everything, plus 6 months of personal one-on-one coaching from me, which we do via online web meeting software. All these prices are in Canadian dollars, and you can upgrade at any time. So if you did the foundation, you wanted to upgrade to the Active Trader, you're going to pay the price difference plus $250. So the price difference there is $2,500 plus 250, so it's going to be $2,750 to upgrade from the foundation to the active. If you want to go from investor to active, you're going to pay $1,250. Okay, so hopefully that makes sense. Now, Desjardins is my broker. I've used them for 7 or 8 years, and they have a partnership with me where they subsidize the education cost for their clients. So if you want a better deal on my education, you basically open an account with Desjardins and use them as your broker. We're going to get Daniel on in a minute to tell you all the great things about Desjardins, but trust me, I've used them for a long time. I think they're the best broker in Canada, bar none. Not only that, but they're going to subsidize your education. Instead of paying $9.95 for the foundation, you get it for free. Instead of paying $24.95 for the investor, you pay $1,000. That's a $1,495 discount. That's 60% off for trading with a great broker. Active Trader, $2,000 instead of $34.95. Another great discount for picking a good broker. Mentorship is $69.95. So what I'm going to do is get Daniel on now. He's going to talk for 2 or 3 minutes about Desjardins. Then I'm going to come back, talk about the upcoming class in May, and take your stock questions, and maybe we'll do a couple more market scans. Daniel, are you there?
I'm here. Can you hear me?
I can hear you great, so go ahead.
Perfect. Thank you, Tyler. So first, I'd like to thank everyone for joining us for the webinar today. I appreciate it. And there are 4 main reasons why you should consider making the switch to Desjardins online brokerage. First point, and probably the most important point for you, is Desjardins is safe. Desjardins is the 6th largest financial institution in Canada. We were recently rated in a Bloomberg Markets report as the 2nd safest bank in the world. So to put that in Canadian perspective, TD is mentioned in the article as 5th in North America, but didn't even break the top 20 globally. We know this is important to you with past events like the financial crisis when we saw several large institutions go insolvent. It can help you sleep better knowing that the financial institution you do business with is very safe. We're also a member of the CIPF, Canadian Investor Protection Fund. And number 2, we're number 1 in customer satisfaction. Desjardins has been awarded number 1 in customer satisfaction by J.D. Power and Associates in 2014. We have won the number 1 spot 4 times out of the last 5 years. And we promise to bring you great customer service and customer experience. We will always be there for you from opening and transferring your account to support using our platforms and tools. And point number 3, we're reliable and cost-effective service. We were the first discount brokerage in Canada and have been in business for over 30 years. This experience translates to a reliable platform you can count on. We offer real-time streaming quotes and fast execution. Desjardins is a direct access brokerage, which means your trade hits the market in 1/10 of a second. Most other bank-owned online brokerages use straight-through processing, which basically equates to you sending an email to their trading desk. Also, most direct access brokers charge something called ECN fee, which we do not. And active traders can trade for as low as $5, but even if you're not an active trader, everyone can trade for $9.95 flat fee for equity trades. And we have very competitive margin rates for those who trade with leverage and offer 3-to-1 buying power for experienced traders. And the last point, we have powerful tools and education. At Desjardins, we know how hard it is to consistently beat the markets and match your account, so we're committed to bring you powerful tools. We offer tools like the Stockscores market scanner as well as Stockscores education to our clients, and substantial discount for Stockscores members looking to upgrade their knowledge and take their trading to the next level. So I would encourage you to visit our website, www.desjardins.com, to get more information and sign up for a free demo to try out any of our trading platforms. And if you have any other questions, feel free to contact me directly. And if you want to get the 3 months free newsletter from Tyler, please sign up and get in the process of opening an account with me by May the 15th. You can contact me, and I can help you get the process started. Thank you, and back to you, Tyler.
Thanks, Daniel. I've put a poll up here. If you want an email from Daniel tomorrow with his contact information and some details of how you open an account with them and the offer in terms of the subsidized education, just answer yes to that poll, and he'll fire you an email tomorrow. It'll have all of his contact information. You can start that communication with him. I'm going to take down this poll in just a moment. As Daniel said, there is a special offer. Anyone that opens an account with Desjardins before May 15th will get 3 months of my daily newsletter for free. That's a value of $177 for a little bonus of answering the paperwork. And that's something that we have open. So I'm going to close this poll now. If you didn't get a chance to answer the poll and you want to get more information from Daniel, you can fire me an email. I'm going to put Daniel's contact information up as well. But certainly you can get some info just from me. Let me just put up, there's his phone number. You can write that down quickly, and his email address. And in just a moment, I'm going to continue on with the presentation, talk about the May training that I'm doing, and then we're going to analyze some stocks together. So I'll just leave that up for a moment. And as I said, you don't really have to write down his phone number if you did answer yes to the poll, because you will get an email from him tomorrow with his contact info. All right, so coming up, normally when people take one of my courses, they do it entirely online. They buy the course online, and then they go through the modules in the Stockscores Education Center. A few times a year, I try to complement that with some live online training. Now, this is going to be the last one for a while because we're going into the summer, and I don't do anything during the summer. I try to enjoy the weather and trade exclusively. So if you want to learn my approach, this is a good time to do it. We're going to add some bonus online training in addition to the normal training you get through the Stockscores Education Center. On Saturday, May 23rd, I'm going to do a foundation overview. It'll be about 3 hours in the morning, 9 till 12 Pacific time, 12 till 3 Eastern time. And we're going to just give a good overview of how all the concepts in the foundation course relate to one another. So if you take the investor course, or if you take the active trader course, that's your first online training session. Then that following week, from Tuesday until Friday, we're going to apply what we've learned in the strategies in real market conditions. So if you take the investor course, you're going to do each evening for an hour, we're going to do market scans from 6 till 7 Pacific, 9 till 10 Eastern. I'm going to run the market scans with you watching. We're going to go through all the charts. We're going to pick out the stocks that look good. We're going to say why they look good, why they don't look good. It's just a real nice way to sort of look over my shoulder as I do what I do every day. Now, for those that do the active trader course, and again, tomorrow's webinar is going to focus on the active trader side of what I do, but I just want to let you know now, I'm going to be trading live that week, so you can watch me buy and sell stocks. We're going to do it for the first 2 hours of the day and then the last hour of the day. There's not much action in the middle of the day, so I'll basically be entering all my positions in the first 2 hours and then exiting them at the close in the last hour. And you'll just see me run the process that you've learned in the class material. You'll actually just see me do it live. And I'll be, using real money making trades. Anyone that registers for this class, either the investor class or the active trader class, is going to get this free or get this online bonus training for free. After May 15th, the price is $4.95. I really want everyone to have at least a week to go through the material before the class. That's why I do this, set a deadline of May 15th, because that way you've got a financial incentive to register a little bit early. Don't save it to the last minute. And then you're going to have a week to get through the material so that when we do the foundation class together and when we do the market scans and when you watch me trade, you'll have some understanding of what I'm doing because you've taken a little bit of time to go through that stuff. If you want more information on the Stockscores education courses, the active trader, the investor courses, go to stockscores.com/learn. But the other way that you can get more information is just answer yes to this poll that I'm putting up on screen right now. And that will just get me to send you an email with some details about the upcoming classes. So if you have an interest in doing the investor class and you want an email describing the pricing and how you register and that sort of thing, just answer yes to this, and I will fire you out that email probably tonight, maybe tomorrow, and then you can decide from there. I'm not going to phone you. I'm not going to email you a bunch of times. That's not my style. If you think that this course is right for you, I'm happy to teach you what I know. If you're not sure if it's right for you, I'm happy to answer your questions to help you decide. But you won't hear from me otherwise. All right, so I'll leave that up for another moment. And then we're going to do some stock analysis. So if you have some stocks that you would like me to look at, now is the time to punch in the symbol for me. If it's a Canadian stock, if it's on the Toronto Stock Exchange, just put a T dot in front of the symbol so I know it's a Canadian stock. If it's on the venture, put a V dot in front of the symbol, and that will enable me to pull up the right symbol for you when I take a look at it. Also, let me know if you're looking at it as a longer term trade or as a day trade, because the analysis I do is going to be quite different. All right, so I'm just about going to close the poll. And again, that poll is up there just if you want me to answer some things for you. While I'm waiting for that to be finished, I'm going to pull up our first stock, and then I'll take down the poll here, T.RUS. All right, so I'm going to close the poll. Thanks everyone for answering. If you answered yes, then I'll send you an email soon. Okay, so first question that's being asked about stocks is Russell Metals, T.RUS. I think this is a stock that's starting to turn around. It actually made a pretty good break from a good pattern about a month ago. It hasn't gone anywhere yet, but I think it still has good promise. Taking a look at the longer term chart, it was in a very steep downward trend. It's broken that downward trend, and we're starting to see stocks like this, I think, benefit from the gradual improvement of the global economy. And we're seeing that with the US dollar starting to weaken, other currencies starting to get stronger. So, do I love it today? I'd like to see it bounce off of support. It's been a little bit weak the last few days, but holding support okay. I don't know if I'd rush out and buy this until it starts to move up through $26.5, $27 again. But I do think if you own it, it's a good hold. Okay, EHTH is the next one. You'll notice there's a little message at the top of the site saying we've been having some performance issues. We've got some band-aids on there, so the site's working decent right now. I've got 6 people now working on this problem, trying to figure out what's wrong, and we think we've got it narrowed down to a few things. So I'm hoping we'll get the site working 100% tomorrow. But just know that we're putting in a lot of time and effort to get that to work right. As I said, it works okay. It's not quite as fast as normal, but certainly was better than it was 2 days ago. All right, so this stock, I think it's okay. It made a break here, but closed below its open, pulled back, and then it just broke the pullback 4 days ago. I consider this more of a swing trade. I think you can trade it to be in and out in a couple weeks, but it does look like it wants to make a little bit of a move higher. I would rate it, if I was going to give it a rating, I'd give it a 7 out of 10. I don't think it's a great looking chart, but it's not bad. T.BB. So this is BlackBerry. Had some life yesterday with some abnormal activity, but it's not in a good pattern. To me, this is a stock that looks like a parking lot. And so I think I would just stay away from this one. I don't really see any great promise in it. I mean, it doesn't look bad either. If you own it, I don't think you have to necessarily jump out of it, but it just doesn't look great. USO, it's been making a nice comeback, broke out of a cup and handle pattern about a week ago, 6 or 7 days ago, and just broke a little pullback today, basically. If we look at the intraday chart on the USO, which is basically oil, it broke the pullback this morning. So I like it. I don't love it, but I think oil looks more likely to go higher than lower. And so that bodes well for the energy stocks, which, they're starting to make comebacks. I don't think they're looking too bad. T.PSI. So nice break from a rising bottom here. Been going kind of sideways since then, but it's got rising bottoms. So see how these bottoms are rising from left to right? That's a sign of optimism. As long as that pattern is intact, I think it's okay. Again, is it a screaming, I love it? No. At best, it's a 7 out of 10, but it does look better. You'll notice that the Stockscores, the green line here, has been below 60 since basically early September. And it just came back above 60 in the last month. So the chart has just started to improve after being really an ugly chart based on our Stockscores indicators for quite some time. So once you learn how to use the Stockscores, they're quite helpful to know which stocks to look at and which stocks to stay away from. All right, T.TH as a swing trade. It's bumping up against resistance. I think it's going to pull back. I think it might test 120 short term. Longer term, I think it's okay. I think it's just going through a period where it's trying to reconcile the gains. I mean, you think about the stock having gone from 40 cents to $1.40 in 3 months. That's a big gain, and so people are going to want to take some profits on that. My expectation probably pulls back another couple days. Bounces maybe off 120, goes back to 145, gets stuck, maybe pulls back to 130, and then starts to move up later on. I personally wouldn't buy it here. I think it's maybe a hold, but I don't know. I wouldn't mind if I had it taken some profits up here as well. All right, next one is NAS. Must be T.NAS. V.NAS. Not finding that symbol. Maybe it's NES. I know that is a stock that looked pretty good. I like this chart. I picked up on this one yesterday. Abnormal volume, abnormal price action. This is called an ascending triangle pattern. I think the stock has a very 70% chance of going higher from here. So I like that setup. If you have New Strike, or if you don't even have it, it's a stock worth considering. What do I think of Kirkland Gold, T.KGI? One of the better looking gold stocks, this one and Lakeshore Gold, they both look pretty good. I like this, and I don't really like the gold sector. I think the gold sector in general is not very good, but there's a couple gold names that look okay. If it were my portfolio and I had 10 stocks, I wouldn't want to have more than one gold stock. And if I was going to pick one gold stock, this would be a pretty good candidate. So if you own this one as your one gold stock, one of the things that happens though is I find Canadian investors in particular tend to have way too many commodity stocks in their portfolio because our economy is so commodity based. People in Calgary have half their portfolio in energy. People in Vancouver have half their portfolio in mining because those are industries that are very prominent in those areas of the country. You got to be careful with that. You're not doing good risk management by doing that. Okay, next one is Vigil, which I traded myself yesterday. So I don't like it for anything more than a day trade. I day traded in and out of it yesterday. I made a 4-to-1 reward for risk, just under 4-to-1 on it yesterday. Today it pulled right back again. It's got life. I mean, I've been trading the stock in and out a few times in the last little while, but I don't think it's a stock you take your eyes off of. You have to be a fairly active trader on this one. GWPH. Good upward trend, pulling back to its trend line. I think it's okay. I'd like to see it come back a little more. At 105, it looks interesting. One of the things I like to do is when stocks run away from their trend line is buy them when they pull back to the trend line. So if you draw a line across these bottoms, you can see it runs away, pulls back. You buy it down here, runs away. Now it's in pullback phase. It hasn't quite come back to the trend line yet. So, it's something to consider there. But if you own it, I would hold it. It looks good. I just wouldn't rush out and buy it. Let's take a look at a little longer term chart. Good thing is it's broken out to new highs. So yeah, I like it longer term, but I don't think you initiate a position here. DRYS. Now the shippers were strong the last little while. Let's see if dry ships was. Yeah, it showed a little bit of life today. I mean, it showed a little bit of life, but it's still a pretty ugly chart. Look at our sentiment stock score at 35. The reason is this stock is still in an up or downward trend. The scores are starting to come up. You can see that today. They're starting to come up a little bit, but I think it's still pretty early to be jumping into that stock as a position trade. SZYM. I mean, I like this longer term. This is another case of a stock running away from its trend line and now pulling back. It should bounce off of the trend line in the next few days, actually. It's right at that upward trend line. So I'd be looking for this as a stock that's going to bounce off of the trend line. I featured this stock in my newsletter right here at just a little over $3. So it ran up to 450, had some news come out, pulled back. I think it's going to resume the upward trend line soon. One of the critical things is what the biotech sector does. Biotech sector has been a little bit uncertain. You can see the profit taking in biotech over the last month or two. I think that's weighing on that stock a little bit, but still the big picture long-term trend in biotech is still strong. That's a 3-year weekly chart of biotech. It's still a nice strong upward trend. Weatherford. I'm not sure the symbol of Weatherford, Brenda. If you know the symbol, let me know. SSNI. So it had some abnormal action 3 days ago. Let's just take a look at the big picture here. Yeah, I like this one. I think this is a good long-term turnaround stock. It's doing something called a bottom fishing pattern, which is one of my important patterns I look for. So I like it as a position trade. I think it's worth considering. Call the stock I was watching today because it was very abnormal. Unfortunately, it didn't meet any of my intraday trade criteria because it fell down from its open. I think it's going to get stuck at this resistance level. I don't love it here. I think it's worth watching because it could get better, but based on today's weakness from the open, I'd be cautious with it. Excel. It's definitely a good hold. Let's take a look big picture. Wouldn't buy it here. Coming into some resistance, I think it'll probably stall in the $3.50 to $4 range, but I don't see a reason to sell it. So if you own it, I would stick with it, but I wouldn't initiate a new position. T.CPH. Just got a few more to go, and then we will maybe do one market scan before we break tonight. So this one, I think I'd stay away from it. Sentiment stock score very poor. Downward trend, can't break the downward trend. I think it's a stock to avoid. WFT, which is Weatherford. I like it as a hold. I think if it can make a good strong break through 15, it is even worth considering as a buy. But more of a hold right now. It's kind of in the early stages of a turnaround, like a lot of stocks in that sector. I don't love it just yet, but I think it's something to keep an eye on. So let's do one more market scan together. This time we're not going to do every one. We're going to do the, actually let's do the abnormal breaks US. This strategy looks for stocks making statistically significant abnormal price gains. Now we're going to view these stocks, and I'm going to pause if I see one that I like. So I'm just going to go through these stocks. There's Dry Ships, made an abnormal price gain today. As I said, I don't really like the chart enough to consider it. McEwen Mining, not bad. I think it's still pretty early. Looks like it might be starting to turn around. That one's 3 days old. That one made a huge jump today, but not a good pattern. So I'm just going to go through these. Now notice how fast I'm going through these. That may seem impossible, but you just do this a little bit and it actually becomes quite possible. There's New Strike. I definitely like that one, NES. It's been the best one we've seen so far. Again, going through these pretty quick, and you really get to the point with some practice where you can look through charts this quickly. ORIG, which is obviously a oil drilling company, I would guess, starting to turn around. I think it's a speculative buy. Again, you don't want to own more than one or two stocks from the sector, so it's something to consider, but I think you got to still be pretty cautious with energy. All right, so I'm going through these as fast as I can. Let me just take a look at the 3-year on this one. Yeah, good hold, not a good buy. This one's actually not bad. This is a break of a pullback. Let me just see where longer term resistance is. Yeah, I think this one's a 7 out of 10 as a position trade. It's breaking a downward trend line from a rising bottom. This is called a flag pattern. Only problem is volume is a bit light today. Yeah, a little light. So not bad. Not outstanding though. So what I'm doing now is going through the charts. When I see one I like, I will pause and I'll explain what I like about it. Obviously going through them very quickly. And the beauty of having this as a video is you can go back later and take a look at them more slowly. I just don't want to take too much of your time tonight. This one was a good one about 3 or 4 days ago, broke out from a trading range on strong volume, good stock scores indicators right there at 35.5. Now it's at 39. So it's made a little bit of a move already. This one's interesting. Let's take a look at the longer term chart. This one's not bad, VRTU. More of a conservative position trade type stock. But yeah, I like the abnormal action today. Risk reward trade-off a little bit questionable because you got to put your support down around $40, but not bad. So we got 7 more to go through. Now you learn how to do this when you do the investor course. That's what the investor course is going to teach. I'm going to show the processes for day trading tomorrow in the active trader course, and then you would learn that in the active trader course, of course. Of course, of course. Okay, so that's the process. I'll just see if there's any other questions. Got a couple more coming in. T.BMP, I looked at this earlier, and I think you mean Bonavista, right? BNP? Someone typed BMP, but I think you probably mean BNP. Let me know if that's the case. So Bonavista is another energy name starting to turn around. You know, I think you can have one of these stocks in your portfolio, not 5, and this would be one that looks decent. There's a few that all have the same kind of pattern. You're basically sort of trying to get in early on the turnaround as a position trade. I don't think you want to be too much excitement, or too much excitement about the energy name. What time does the Foundation Overview webinar start on Saturday, May 23rd? It starts at 9:00 a.m. Pacific time. So I'm not sure what time zone you're in, Brian, but it'll be 9 a.m. Pacific. And now Brian just registered for the course today. So Brian, you'll get an email with all the details after the 15th. We'll have all those links and all the details for you then. And those sessions are recorded. So for someone that, you know, wants to do the course, but they can't make every one of the live online classes, I am recording it just as I am recording tonight's session. And so you can always follow up with that. And the nice thing about recording it is you can watch the video as many times as you like. All right, well, I've basically taken 1 hour of your time as promised. I want to thank you all for participating in tonight's webinar. If you want to learn about my active trading approach, that's the webinar tomorrow. Just go to the Stockscores homepage and you can register there for tomorrow night's webinar. I'm going to do kind of the same theoretical stuff, but then we'll go into active trading and how I day and swing trade the market. I want to thank Daniel from Desjardins for coming on tonight and providing us with some insight into what they do. And if you answered yes to either of the polls, you will get an email from us shortly with some follow-up information for you. Thank you, everyone, for a great evening, and I hope that you enjoy the rest of your night. Have a good night.